morning to you all. Tony Virtue speaking, Virtue and Partners, with our regular monthly updates. First of all, happy Christmas to everybody. It's been a long year, and I know a number of you will be looking for a rest, so nearly there. We've got a couple of client functions coming up, and very much look forward to seeing you there. Last time we had our newsletter, we were talking about the US election, and it's amazing how quickly people adjust to things happening. So it's been and gone. Trump has won, and the Republicans have all three levels of the houses there: Congress, Senate, and the President. As the graph says, it's actually not that unusual for this to happen. So before we think, oh, it's going to be completely chaotic, this is fairly common over the last 50, 60 years. They then have interims after 2 years, which tends to kind of stabilise things back. So he's got 4 years to go hard, and that will be it. And you can see meetings now down in Mar-a-Lago in Florida seems to be where the country's being run, even though it doesn't take over till the 20th of January. What to expect? Well, you know, make America great again. So very much pro-US from an investment point of view. That's probably invest in US companies. If those tariffs do get out of control, well, that would be inflationary, but the big difference between what they say and what they will do. So at this stage, market's saying, well, pro-growth, growth is good, and cut out expenses if you can. Well, that is good for reducing debt, and markets have been fairly solid, reflecting that to some extent. As I speak, US just hit the 52nd consecutive increase in the value of the NASDAQ and the S&P. You should expect a 5 to 10% drawdown at some stage, and I mean those pullbacks have happened, and then it's gone again and again. Domestically, we may well hit another all-time high today. So quite a perverse set of circumstances where on one side we have assets at all-time highs, shares in aggregate properties, certainly in Australia in aggregate, and yet cash is very tight. And why would that be? Well, we get back to interest rate policy, we get back to the APRA buffer, which means that we can't calculate a mortgage for you below 9%, which clearly is excessive in a situation where interest rates are dropping. Interestingly, one of the last acts of Parliament for the year was the federal government introducing legislation and getting it through to really have more control over the RBA. So there'll be two boards, not one. There'll be the opportunity for the Treasurer to override them on interest rate policy, to think beyond just, if I can say, the macroeconomics of the statistics. There's a reason why they call economics a dismal science, because they often get it wrong. So whether that will force interest rates down a little more, whether they'll lean on APRA to drop the buffer, which is probably an easier thing to do and doesn't draw so much attention to yourself, that's probably around the corner there. Certainly, though, the Australian equity market has been strong. The growth stock, I'm talking your REAs, I'm talking your WiseTechs, notwithstanding what's going on there. I'm talking Goodman Group have done extremely well. So there are very good businesses to invest in, and we're seeing that globally. Again, the big seven really dominating the US market, showing where you have pricing power. You get your note from Microsoft. There's not a lot you can do about the $2 a month increase, and it just feeds through into greater profits. Overnight, Apple hit an all-time high. And as I mentioned before, these companies individually are larger than the entire Australian stock market. So we do need to have that diversity in what we're thinking there. At this stage, though, we've come through the AGMs. Outlooks are reasonable here, and certainly the dividends are holding up. You're seeing that coming through into your accounts. Property probably going a little bit sideways till we do get these interest rates coming off. But you're seeing policy coming through now. So the Victorian government, for instance, eliminated stamp duty for new properties, strata-type properties, for the next 12 months, even if they're worth 15, 20 million. This is what happens when you really have to get things motoring, if I can say that. Up here, New South Wales looking to extend the amount of medium density you can build close to railway lines, closer to the city, and the metro is helping as well. Still a lot of people coming into the country, and that of course is driving a lot of the activity. So in aggregate, we're just about going up, but per capita, we've had 6 quarters of negative growth, and that's why many of you are feeling like that cost of living, your income is not keeping up with the increased costs of buying things, particularly discretionary things there. So look, politics is done for the year, so don't expect too much to happen now until Australia Day. In the meantime, we're busy. Those of you internationally coming back into Australia, we look forward to seeing you. I certainly look forward to seeing as many of you as possible at our 2 town functions this year, 2 functions. That's all for this year, so it's been a pleasure to work with you all again. Tony Virtue, when experience pays.